Lucid has experienced a prolonged decline in its stock price, lasting for the past 18 months. In today's video, we'll assess the long-term and short-term investment prospects by predicting the future price of Lucid stock. What is the Lucid stock price? Lucid Group's shares are listed on the Nasdaq Stock Exchange, the second largest stock exchange globally. The stock of this electric vehicle manufacturer is traded under the ticker LCID. The latest developments surrounding Lucid Motors indicate disappointing earnings results for the first quarter of 2023. This has added to the existing selling pressure on the stock, which was already in a downward trend. The earnings report for Q1, released on May 8th, disclosed a loss of 43 cents per share. The provided Lucid stock chart illustrates a highly bearish price movement for the shares of this EV manufacturer. The stock is down by 88% from its all-time high and 57% from its peak value within the year. Recent analysis suggests the potential for a further decline in the Lucid stock price. The possibility of Lucid Motors being removed from the Nasdaq 100 cannot be confirmed. However, like Rivian, Lucid has faced challenges recently, and its stock performance has been turbulent. With a market capitalization of around $13 billion, Lucid's shares have declined by over 75% since early 2022. In 2021, Lucid generated significant attention from Wall Street due to its growth potential. However, as investors shifted their focus to other electric vehicle companies, Lucid's stock value decreased substantially. After reaching a peak of $55 in November 2021, as of June 28, the Lucid stock price stands at $6.50. Regarding recent developments, Lucid announced a $3 billion stock offering to address production issues, which received a negative response from investors, leading to a 24% drop in the share price. The company's production slowdowns have affected its decline. The $3 billion offering is expected to have a dilutive effect of approximately 20%. The stock offering consists of a public offering worth about $1.2 billion, equivalent to 173.5 million shares, and a private offering of $1.8 billion, 256.6 million shares, from Saudi Arabia's Public Investment Fund, PIF, Lucid's largest private benefactor. During Lucid's fourth quarter earnings call, CEO Peter Rawlinson attempted to assure investors that the production challenges had been resolved. However, not all investors seem convinced by this statement. The future of Lucid's public favor remains uncertain, and its time in the Nasdaq 100 may be short-lived. Due to recent disclosures and financial considerations, investing in Lucid Group may take time and effort. The company's willingness to take various measures to raise money raises concerns for potential investors. While it may be challenging to enumerate 439 million distinct reasons not to invest in Lucid Group stock, at least one significant reason should pause any prospective shareholder. But before we continue, we want to thank you for watching this far. Lucid Group's recent announcement of a public offering and private placement of shares has raised concerns among investors. The company plans to sell approximately 439.23 million shares of Lucid stock, which led to a 15% decline in Lucid stock on June 1st. While some may view this as a buying opportunity, there are several reasons to exercise caution. One concern is the need for more clarity regarding how Lucid Group will utilize the raised capital. The company stated that the funds would be used for general corporate purposes, including capital expenditures and working capital, but did not provide specific details. This ambiguity raises questions about the company's strategy and plans. Another significant concern is the dilution of existing shareholders' stakes due to the issuance and sale of common stock. This dilution erodes the ownership value of current shareholders and can be seen as a lack of consideration for their interests. The capital raise also highlights potential financial desperation on the part of Lucid Group. The company reported a declining cash position and a widening net earnings loss in the first quarter 2023. This raises doubts about the company's financial stability and ability to address its financial challenges effectively. Additionally, the concentration of power and control held by a single entity, the Saudi Public Investment Fund, PIF, over Lucid Group raises further considerations. Shareholders may be concerned about the influence and decisions of the PIF on the company's future direction. Lucid shares are trading 22.5% higher than their all-time lows, recorded in January 2023 at $6.09. While there is a possibility of the stock retesting the $8.40 resistance level soon, the most likely scenario still points towards further downside. Analyzing the Lucid chart, it is evident that the most significant resistance lies within the $15.50 to $17.50 range. The stock attempted to surpass this resistance in January 2023 but failed to gain strength. As a result, the stock is trading below the 200-day moving average. My prediction for Lucid stock price in 2023 is that it may trade within the $4 to $10 range. It is difficult to determine the exact value of Lucid stock in 5 years. Analysts anticipate a recession to impact the U.S. economy in the latter half of this year. The Lucid Gravity SUV would pose significant challenges for the company. Lucid went public through a merger with a special purpose acquisition company, SPAC, in July 2021. Many SPACs became overvalued in 2021 during the bull market, resulting in significant declines during the next bear market. Higher interest rates have also intensified selling pressure on Lucid shares, currently down from their 2021 highs. Despite reporting poor earnings in Q1 2023, Lucid Motors remains ambitious. The company aims to produce 10,000 vehicles in 2023, with the Lucid Air in production since 2021. The highly anticipated sizable electric SUV, Gravity, is scheduled for production in 2024. The success of this new SUV will influence the Lucid stock price prediction in 2025. However, it is still unlikely for the stock to trade above $17.50 by that time. Forecasting the price of any stock 7 years ahead is speculative. Lucid faces significant competition from established companies like Tesla, NIO, and Rivian, which are performing well. By 2030, electric vehicle sales are projected to account for 40% to 50% of total car sales in the USA. If Lucid captures a substantial share of these sales, the stock could trade above $32. However, it's important to note that innovative companies like Lucid are high-risk investments, and not all EV companies can achieve the success Tesla has attained in recent years. These companies often face cash flow challenges that can lead to financial difficulties. Overall, the reasons not to buy Lucid Group stock are accumulating. The company's financial issues, lack of transparency in capital deployment, potential future dilution, and concentration of control are all factors that investors should carefully evaluate before considering an investment in Lucid stock. What are your thoughts on Lucid Group's current situation? Let us know your thoughts in the comments below. Make sure to like this video if you found it helpful and share it with others interested in Lucid or the broader world of investing. This is Nate, and thanks for sticking till the end. See you in the next one. If you're curious how Lucid can quickly get funding from PIF, check out this next video.